Hello everyone and welcome to this video in the Learn Technical Analysis series brought to you by thetechnicals.com. Today we're talking about trends and drawing the all-important trend line. But before we get to that, as always, just a quick risk disclaimer. Trading in the financial markets carries a high level of risk and may not be suitable for all investors. Before deciding to trade in the financial markets, you should carefully consider your investment objectives, level of experience, and risk appetite. Okay, let's get started real quick. Now, one of the most powerful and important tools of technical analysis is the simple trend line. While they're not always absolutely precise, trend lines provide an excellent way to define and outline trends, whether they're uptrends or downtrends. They also provide dynamic support or resistance that can be very helpful in your trading. Now, how do trend lines do this? Well, let's take a look here at these two diagrams. On the left-hand side here, as we can see, we obviously have an uptrend or a bullish trend. In this case, we should define this uptrend by connecting the lows in price. Since we're connecting the lows, this trend line can be considered a support line. Remember that support is considered a price floor. It's similar to a horizontal support line that you plot at a certain price, but instead of being static, this support is dynamic, meaning the price levels of support will change or increase over time. If we project the angle of the trend line forward in time, we could have a useful guide as to where support should be going forward. Once we have a well-established uptrend support line like this in place, it can help us to trade based upon bounces or breakdowns of this support. Likewise, if we take a look at the diagram on the right, we could see that during a downtrend or a bearish trend, we should define it by connecting the highs in price. Since we're connecting the highs, this trend line can be considered a resistance line. Remember that resistance is considered a price ceiling. This resistance is dynamic, meaning the price levels of resistance will change or decrease over time. If we project the angle of the trend line forward in time, we could have a useful guide as to where resistance should be going forward. As with the uptrend support line, once we have a well-established downtrend resistance line like this in place, it could help us to trade based upon bounces or breakouts of this resistance. Now let's take a look at some chart examples. Right over here I have an example of a chart that is obviously in an uptrending mode. So let's take a look here by simply drawing a trend line like so. And that connects the lows in an uptrend. Now let's take a look at a downtrending situation. Right here we have an obvious downtrend. We could connect the highs for a downtrend resistance line, as we can see here. Now let's take another look at an uptrend, as we can see right here, and let's go ahead and draw an uptrend line. And that's uptrend support. Trend lines are among the best technical tools available for defining the direction and strength of price trends, while also outlining key dynamic support and resistance levels. Please visit thetechnicals.com for more trading and technical analysis education. Thank you very much.